Experts agree that US sanctions targeting Gazprombank represent a significant setback for Russia. The bank, previously the last Russian financial institution with access to the SWIFT system, will be fully disconnected from December 20, 2024. The only exception is transactions related to the Sakhalin-2 energy project, permitted until June 28, 2025. Gazprombank has played a crucial role in facilitating payments for Russian gas exports, handling dollar and euro transactions before converting them into rubles.
Gazprombank was the only Russian bank with accounts in US banks and effectively dominated the currency market for dollars and euros in Russia. This move raises questions about the continuation of European imports of Russian gas and oil. While supplies to India and China are likely to persist, the addition of 50 smaller Russian banks to the US sanctions list, previously used for foreign trade transactions, makes this the most severe economic blow so far.
Sanctions are expected to severely impact Russia's foreign trade revenue in the short term. This strain is already visible, with the ruble plunging to a historic low of 114 per dollar. Simultaneously, Gazprom's stock value dropped to nearly $1 per share, a stark decline from its peak, when shares were worth over 8 times as much. In an attempt to stabilize the financial markets, Russia's central bank announced a halt to foreign currency purchases on the domestic market from November 28th through the end of 2024.
The central bank is taking measures to reassure the market and maintain financial stability. Halting currency purchases sends a signal that the authorities are aware of the challenges and are working to address them. However, these measures are temporary, as the central bank cannot sustain such interventions indefinitely.
Stabilizing the ruble is only one of the many challenges facing Russia's government. The central bank is grappling with a projected budget deficit of nearly 3.5 trillion rubles for 2025.
Initially, the deficit was estimated at 1.2 trillion rubles. Now it turns out to be 3.3 trillion, nearly 3 times higher. To bridge this gap, the government will likely rely on the National Russian Wealth Fund. However, with only 5.2 trillion rubles in liquid assets available, using 3.4 trillion would deplete the majority of the reserves.
Inflation is accelerating across Russia, with prices for everything from food to housing surging. To curb inflation, the central bank raised its key interest rate to 21% in October 2024. This decision made mortgage loans prohibitively expensive, effectively freezing the housing market. Such economic disruptions are being felt across multiple sectors. The central bank's governor warned that additional interest rate hikes might follow. Reported by Bastun Katerina Yulia Granovska, UATV News. Sanctions and inflation have severely impacted Russia's economy, causing the real estate market to collapse. Apartments remain unsold, and construction projects have ground to a halt. The Russian central bank recently raised the key interest rate to 21%, a record high for the country. This has pushed mortgage rates to unprecedented levels, 25% at best and up to 40% or more at major financial institutions. As a result, mortgages have become virtually unattainable, and the government has discontinued its subsidized mortgages programs. Russians are no longer buying real estate.
This is not the highest interest rate globally, it ranks 12th. For instance, Venezuela's is nearly 60%. However, with another rate hike expected in December, this indicates inflation is higher than the central bank's benchmark rate, signaling a worsening situation.
This sharp rate increase has taken a toll on Russian industries and businesses. While the federal budget prioritizes record military spending, businesses receive neither funding nor subsidies. To stay afloat, companies are raising prices, fueling inflation, devaluation of the ruble, and rising consumer costs. Meanwhile, the Kremlin has been forced to adopt deeply unpopular measures. President Putin signed a decree significantly cutting war-related compensations payment, with some payouts slashed by up to 30 times.
Who will determine whether injuries are severe or minor? Here everything will depend on how well this system will work. It will also create pressure in Russian society.
Experts warn this system could also become a hotbed for corruption, with bribes for falsified or favorable medical diagnosis expected to skyrocket. The government, however, offers little more than advice. Russian Finance Minister Anton Siluanov suggested citizens shift their saving from foreign currencies to domestic government bonds.
Siluanov essentially says, why keep your money in banks, buy government bonds instead. This directly funds the war effort. Maybe it's even better for us, because the more bonds there are, the more inflation will be. We are witnessing the beginnings of an economic nightmare, a financial abyss that's only growing deeper.
Russia lacks the resources, both financial and human, for a prolonged war. The Institute for the Study of War highlights Russia's ongoing demographic crisis, which complicates troop rotation on the front lines. The substantial losses among Russian forces in Ukraine have further strained the country's population, creating challenges even for the nation of Russia's size. Experts argue that the Kremlin's claims of economic stability are pure bluff.
Kremlin will not be able to sustain the protracted war effort for years and decades to come while shielding Russian society from economic challenges. Consistent Western and international support for Ukraine's resistance on the battlefield will further exacerbate Russia's economic problems, from an Institute for the Study of War report.
According to Ukraine's General Staff, Russia has suffered over 700,000 casualties, killed and wounded, since the full-scale invasion began. Compensation for those losses, included death benefits, has cost Russian taxpayers tens of billions of dollars. This excludes signing bonuses and monthly payments for contracted soldiers. ISV analysts predict that sustained international military aid to Ukraine will exacerbate Russia's economic troubles. Reported by Bastun Katerina Victoria Smirnova, UATV News.
Ukraine's Western partners imposed the first sanctions on Russian oil exports back in December 2022. Since then, Moscow has started assembling a so-called shadow fleet, which already numbers several hundred tankers. Until recently, they carried about 4 million barrels a day and brought billions of dollars to the aggressor country. Russia uses offshore companies to acquire vessels for the shadow fleet, which makes it much more difficult to track them.
With Moscow under Western sanctions, an increasing number of tankers are ferrying illicit goods and potential environmental devastation across the globe. Not only are these vessels creaky and largely unregulated, they are often uninsured, meaning that in case of a leak or more serious spill, a government would struggle to hold them accountable, from the political publication.
In the South China Sea near the coast of Malaysia, shadow fleet tankers meet to transport oil, according to the Bloomberg investigation. There, in July 2024, a Russian shadow fleet vessel crashed into another tanker, causing both of them to catch fire. Sky Truce, a non-governmental organization based on satellite images, said that 9 cases of oil spills caused by Russian shadow fleet tankers were reported. Experts are sure that there are many more such incidents. The risks caused by activities of the Russian shadow fleet are global. The UK is more active than Ukraine's other partners in combating illegal oil transportation from the Federation. Not only another 30 ships, but also insurance companies that cover their operation have fallen under the sanctions imposed by London.
I'm announcing the biggest sanctions package of the Russian shadow fleet, and it underlines the UK commitment to Ukraine. We are supporting them by £3 billion a year, every year, for as long as it lasts, to support them militarily. And of course, with both economic and humanitarian aid, we continue to support Ukraine.
Bloomberg, citing anonymous sources in Brussels, writes that the EU plans to impose additional restrictions on the Russian shadow fleet. Ukrainian President Volodymyr Zelensky called on the partners to step up pressure on the Kremlin.
This is an important step, and it would be right for European partners on the whole EU level, as well as other partners, to support such sanctions. The fewer excess profits Russia earns from oil, the fewer resources it will have to wage war. This is a clear connection, a connection that must work for the sake of real peace.
According to Bloomberg, Brussels may ban more than 45 Russian tankers from accessing European ports and services in the next sanctions package. At this point, the US sanctions list already includes 39 tankers of Russia's shadow fleet, while the European list only includes 19. Reported by Anastasia Tarnavska, Larissa Petruk, UATV News.